275 strike put, KG, and against it to offset some of the costs on the that bull or bearish put purchase, we're going to sell the 260 strike put. So $15 wide bearish put vertical. You're paying roughly, I got a 510 debit on it. It's trading 550 now because, as I mentioned, the stock has gone lower. That expands the price of it. But you're buying that $5 in the money put, which has got that higher negative delta on there, and selling something that's out of the money by about 10 bucks on this one. So KG, you're basically paying just over 1/3 the width of this bearish put vertical. And even if you pay that 550 debit or 510 debit, and it takes your break even down to just below 270 on this one, you don't need that big of a move on a percentage basis to get below that that level.
Move this over.
Exactly, and it could actually kind of sustain around these levels as well, and this could be profitable as long as, once again, the stock is kind of moving to the downward direction. Now, what's also very kind of interesting with this trade, Tom, the 265 level is actually a key area of support for this stock. So even if it does go down to 265, this still would be a winner if it is able to trade at that level at the time of expiration. But you're right when you're looking at that risk-reward strategy as well as it being risk-defined, but you do need a little bit more of a move to the downside, and having it sustain that way is going to be very key for this name. And you're giving yourself a little bit more time. The January monthly expiration here, you got about 4 weeks for this to really mature. And you could also look at potentially taking the trade off if it does go in your direction before the time of expiration if the market is available. So overall, this is a bearish trade nonetheless, but you're giving yourself a little bit more deltas, a little bit more movement to the downside here in order to make a profit. And that's really the trade setup with this name. Any type of massive reversal to the upside, though, Tom, you got to be mindful. You could see also premiums being crushed within this spread.
Yeah, and that was one of the key things, KG. You mentioned, you got 4 weeks in this trade, but that gives you some flexibility as far as trade management goes because, hey, if you get the move you want down below maybe 265, 260, and this thing starts to expand, and gives you the opportunity, if the market's open, to close it ahead of time. If all or a portion of your trade. Right. But then, KG, I was also looking at the fact that, you know what, it's less than $1 below. The break even's less than $1 below. IV percentile rank in Apple now down near the 4% level. So we're in the bottom, basically 9/10 of where we've seen implied volatility levels. So that makes these verticals, when you're buying them, costless, right?
Costs a little bit less, yeah. And if you do see volatility expansion or IV spiking, and that IV spike is in relation to the stock moving to the downside, that could also accelerate profitability, at least in the near term. Any type of, once again, hiccup within this stock. So overall, once again, it's directional in nature. This is a stock, though, and I will just go back to the technicals, that we can see pullbacks, and sometimes it can be prolonged, but this seems like a solid uptrend. So this might be one of those trades, Tom, where if it goes in your direction, you got to make that decision as to what your profit loss is going to be, what your take profit target is going to be, and maybe readjusting the trade as you see fit. I don't know what your thoughts are on that one, but kind of holding a trade, especially a spread going into the monthly expiration for January, could get a little bit dicey. I'm not sure if you want to talk about some of the experience with that in the past. Yeah,
and that's the truth, KG, because you have 4 weeks and it's not going to fully expand to max profitability, even if it went down to 260, on Monday or on Tuesday. So you've got some duration. That's what you have to start taking a look at as far as trade management goes. Is, hey, how much profitability am I willing to take, with the thought that, hey, this stock could easily reverse and go higher again. It's sitting at a key level right here at the 50-day moving average also, which we haven't been below since August. So those are those trade management skills that you have to talk about. Like, if this thing expands to $7, do you start closing all or a portion of it? Or do you, if you really believe that's going to go below 260 over the next 4 weeks, maybe you keep it on. So, yeah, those are decisions. But there you go, Diane, a bull-bear debate in every form here from KG and I.
Absolutely, and you took us to school. Thank you, guys, and our thanks to KG for pinch hitting today. We've got cash tags coming up. The team from Likefolio will be along with new sentiment data on Royal Caribbean. And if there's still strength there, those shares are actually higher right now. They've been an outperformer this year in its sector. Stay right here on Schwab Network. Fast Market will be right back.
Hi, I'm Alex.
I'm Jane.
And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
All right, so I don't have any position,
Trading at Schwab is powered by Ameritrade.
but I've noticed on the 4-hour today I actually had
Connect with the Schwab Trade
an
Desk.
alert
Our team of passionate traders ready to tackle
set
your trading
here.
questions, no matter how complex. Plus, you get 24/7
Zoom in.
live help and access
It's a
support
4-hour
by phone,
bullish candle,
email,
0
and
wick.
in-platform
So I set an alert here at the 300 level for it to test. It actually went down about
Whether you're an
30 more
experienced
points.
investor or just getting
The
started,
low of that
Charles Schwab
was
offers a website that's
273,
right
so
for you. Are you an active trader? Our
27
active trading webcasts are designed
points,
to
give or
help you
take.
develop a deeper understanding
Almost
of
30 points, let's
technical
just call it.
analysis, options, futures, and more.
Then it
Best
obviously
of all, you
rallied.
can ask questions by chatting directly with an
What is
education
that?
coach. It's interactive
I don't even
learning
know what
at
that
its
level
finest.
is.
Tune in live or watch on demand.
I don't
Head
remember
over
setting
to
a black one.
schwab.com/coaching
Delete
and
that.
start learning today.
I mean, an hour and a half left of this candle. It's holding, literally
No
towing the
politics, no
VWAP.
spin, just the market from open to close and
I
beyond.
think
Streaming 24/7, any screen,
it'll go to this
anywhere
pivot
at
level,
schwabnetwork.com.
which is
Welcome back to Fast Market here on the Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago
25,
studio. Time now for our
597,
cash tag segment. For that, I want to
75,
bring in our next guest, and that is
and
Megan Brantley,
retest.
Vice President of Research at Likefolio. We are looking across the cruise
But we'll
liners
see.
today with Royal Caribbean in particular focus. Carnival out with its earnings today, and you saw, although it was mixed for the quarter, it was a strong year, and you've seen strength in Royal Caribbean as well. When you look across your data, what's the top takeaway, Megan?
Yeah, I think that Royal Caribbean is getting a little bit of a boost from that Carnival report. And when we look at our cruise data at large, we're seeing some solid momentum here. And I will note that this, from a seasonality perspective, isn't always when we see, the most traffic, the most demand. We typically start to see this more in February and March and April, what we classify as wave season, which is like that really popular booking season. So whenever you compare and look at Royal Caribbean versus peers, it sits nicely in the middle. And I think that this tracks
Okay,
whenever
so
you look
Nvidia.
at its price point as well. It's kind of like the Goldilocks cruise. The price point is a bit below a Norwegian. It's a bit above a Carnival, and you can see demand sits right there as well. From a mind share perspective, Royal Caribbean and Carnival have a much higher consumer mind share versus the Norwegian that you see above. But
So
I
this
think
pivot
that
level
the
is really
Carnival
critical right here where I
report
set
and
it.
overall reaction is a good omen
If it
for Royal
closes
Caribbean, which won't
above,
report
that'll
here for
probably
about
act
another
as a
month.
support
They're
level,
delayed
and then
about
I'll
a month on
probably
their
go to the
schedule,
second
and
one that you can
we
barely
see
see
slight
because this
overperformance, and I think a lot of this is driven
bearish order block.
mostly by just the premium brand that
But
Royal
what's that
Caribbean
at?
commands
It's at
versus a Carnival, and
25,683.
also just that premium consumer.
It's at
Consumers who are willing to pay a little bit more for
25,683.
that perceived superior experience, for a little bit more
Set it
exclusivity.
there.
And we're seeing that a bit in our data, but you can see there's not a huge separation there. So a nice report from Carnival for us is right in line with what we expect. And we actually see a little bit more strength out of Royal Caribbean. So this could be a nice play over the next month, especially ahead of earnings, as the market kind of reacts to the stronger than expected cruise industry at large.
Hey, Megan, when you guys look at, I think everything's changed a little bit for some of these cruise lines is the consumer spending while on board and the other things that they have, whether it's private islands, stuff like that. Are you guys seeing good traction there? Because if you looked at the Carnival report, it wasn't that great because the stock initially went down, but then started spiking after the conference call and stuff, and booking trends continue to be better. RCL has the best balance sheet out of all of them at this point. So this kind of alleviates maybe some of the consternation because the stock has pulled back from recent highs. But are you guys seeing any trends in your data that says, hey, people are willing to get that all-inclusive deal by buying, a spot on a cruise, but then the money that they're spending while on board continues to move higher, and that goes directly to higher margins, right?
Yeah, we're actually seeing increased app adoption on Royal Caribbean. And I think that that really leads into what you're talking about in this on cruise spend, because what consumers are doing is they're purchasing these packages before they ever set foot on the boat. So you can kind of get a better lead time into how that increased spend looks. And at least for us, that digital traction and that app traction is a solid indicator that consumers are still spending. They're still willing to splurge on that excursion or that drink package or that cabana. You can imagine all of these amenities. And part of that, the reason why Royal Caribbean we feel is so insulated versus other peers on kind of this upcharge effect is because its audience is typically comprised of a higher earning consumer. So, we've talked a lot about the K-shaped economy and how, these higher earning consumers are more insulated and more able to continue spending at these higher levels, and that certainly benefits a name like a Royal Caribbean more versus a Carnival cruise line. I think that
NVIDIA is
there's also an
looking
element
like,
of a bit of a trade down effect of potentially
I'm
some
looking at this
consumers who are
EMA
trading down to
on the
Carnival
4 hour,
just for
which
a more
is
affordable value package. But
181,
at large, the core
let's say
Royal Caribbean
181.19,
customer is
being conservative, but it's
and
flattening out
even Royal
here.
Caribbean reported strength
It's
among
going
its core
down.
consumer
No,
base,
it's
and that they
flattening, moving
expect to see
sideways.
spending
I mean,
continue
it's
to rise. Though they
popped in
did
the
note last quarter
past
that they don't expect it to rise by
hour.
double
This is
digits. They just
holding,
expect it to be
right?
strong. So I think any surprises here, any
15
resilience or improvements in
minutes.
spending could be a nice surprise ahead of earnings.
Do you think,
This is a
Megan, that the
15-minute
street
opening range.
may have been underestimating Royal Caribbean into like
Let's
Carnival's
see.
results, maybe in terms of the look ahead into
So
2026,
this
fueling
draws
some of this
it.
momentum that we're seeing in Royal Caribbean
So that
today, because they
1
talked about how
is
booked
basically the
out they are into
range,
2026 and expectations. We may see
the
the same
opening range,
from
high,
Royal
low.
Caribbean, especially when
It's
you think about how
50% of
shares
that. So
performed
with
off the
this
back of
drawed
their
line,
last quarter, even though they
you
had,
can do this yourself.
they did better than
You just
expected,
draw a box
had
from the
pretty strong
high,
guidance, it seemed like.
50%,
But the stock sold off.
and then you just
What's your
multiply
thought
it.
about like what you're
Like literally
expecting
it
to
would be
hear and see, or what you're seeing about sentiment
half.
around bookings for 2026 for Royal
And
Caribbean?
that's where you get your.
We want to see strong signs of that forward-looking booking. So we have seen
That's where you get your first
indications
target.
that consumers are booking a little bit closer to
And
that
second
departure date,
target
so
would
that
just
cuts
be
in a bit to our lead time that we like to have. Typically next quarter is when we're really
so.
looking at that peak season, that wave season, and you can kind of see that
Yeah, I think this is
seasonality
going
when
to
you
go
look at our
probably
demand chart.
to
So we're going to be tracking this one
181.50
really closely in the
and
next
then
month to be sure that
183.
Royal Caribbean can kind of keep up the pace that it's
Pretty
maintained thus
round
far.
numbers.
We'll also be looking at those app mentions like Tom mentioned, just to
181.50
try to get
first
a gauge of
target,
how
then
much consumers are upgrading their experience, if you will. But I
183.
think if you zoom out, if you look at where expectations sit for Royal Caribbean versus where expectations sit for Carnival, although Royal Caribbean stock, I think shares have pulled back about 20% from highs earlier this year. If you zoom back on like a 5-year
Okay.
basis, the stock is up almost 300%. Carnival in the same time frame up about 44%. And a lot of this just has to do with just the fiscal responsibility and the underlying operations in Royal Caribbean. But we do see superior consumer sentiment, and for now, an edge on those booking demands for Royal Caribbean. So definitely something to watch. We think that we could be setting up for a more resilient consumer than perhaps the market expects, and perhaps a better report than the market
So
expects. But
put in my
as you
chat,
mentioned, even a nice report doesn't always translate into a stock pop immediately
NVDA.
after earnings. So we'll have to take a look and see where the stock's trading before earnings and how demand shakes
Oh,
out.
I
But
could
right
probably
now,
just do
at
this,
least,
huh? And
things are looking really nice
open
for Royal Caribbean.
Hey, Megan, real quick here before we let you go. They talk about,
WhatsApp,
RCL's got the best,
right?
Maybe balance sheet in
And
here.
then I
It's a little bit more
can
upscale, this K-shaped economy that everybody's talking about. And I see these videos
scan,
from
I
Carnival
guess.
Cruises, and I just go, no way in heck am I going to go on one of those Carnival Cruises, because it's a different vibe. Is that starting to show up in any of your data where, this K-shaped economy might be supporting the higher end portion within this sector, which is RCL?
All right.
Yeah,
Logging
we've seen
in.
that even in some premium retail brands that have reported of late. On Holdings is an example of one that we've tracked recently that has really benefited from that higher earning consumer in that K-shaped economy versus when you look at what Nike just reported. And so I think that this is certainly on the upper part of the K-shaped economy. If you're looking at cruise lines, that's where RCL falls. And so we would expect to see some overperformance here. We'll see how things shake out. But if we start to see some underperformance, that could be troubling, but we aren't necessarily seeing major red flags right now.
All right. Thank you, Megan. We'll leave our conversation there for today. That's Megan Brantley, Vice President of Research at Likefolio. All right. We're going to get into the trading perspective on all things Royal Caribbean. Tom, we got good insights from them. Royal Caribbean, especially when you think about the financials, you mentioned how strong their balance sheet. I definitely wouldn't underestimate their performance when you've got Jason Liberty at the helm of the company. He's the former CFO who took over that job. It'll be 4 years ago in January. He took it over in January 2022. So, you compare that balance sheet to that of Norwegian, to that of Carnival, much better. And again, they are considered the more premium compared to the other two. So I do think there is some strength to be seen there. But what's your final take before you get into the example trade?
This Megan mentioned it, nearly 20% pullback, before today's pop of about 3% on the back of Carnival's cruise line. So maybe that gives you opportunities. But as she mentioned, if you look at this thing in a longer term view, 5-10-year chart, it's gone up pretty significantly, probably reflective of the more affluent consumer and then also the better balance sheet that they have. So I looked at a strategy. They report earnings on the 27th of January, so I want to avoid that, but maybe take advantage of some continued optimism in this name, especially after CCL beat expectations and raised their guidance moving forward. So I went out to the January monthly options here, 28 days to expiration, and just looked at a pretty straightforward bullish example here. January 16th, buy the 290 strike call. That's in the money by about $5. And then against it, sell the 320 call. So basically a $30 wide bullish call vertical that you're going to pay roughly. I've got $12.50 debit on it. That's where it was trading earlier. The stock has come in from session highs. It's probably closer to $11.30. So you can get this actually cheaper now. But the debit you pay, whether you pay $12.50 or $11.30, is going to be your risk. So $1,250 or $1,130 per spread on a $30 wide vertical. If you pay $12.50, it takes your break even just above 302 to the upside on this one. So on a percentage basis, not that big of a move needed. And one of the key things when looking at directionally biased verticals like this, IV percentile ranking there is about 8%. So we're in the bottom 10% of where implied volatility levels have been over the last 52 weeks. And when you buy directional verticals like this is a bullish call vertical. If you bought a bearish put vertical, it's going to cost you less when implied volatility levels are lower on this one. So that's a benefit also. You still have that risk. You need the stock to move higher by at least $7 to get above that break even. But it's risk defined. You're directionally biased. You know exactly what your downside is going into a trade like this, Diane. But you know what? If you're bearish on RCL, you think it's going to continue to move lower like it has over the last couple of months, then do the opposite. Do a put vertical to the downside. But I think one of the keys is you're avoiding earnings, but still giving yourself 4 weeks in this trade for it to develop.
Basically hit that.
Got a little bit of time in there. Thank you, Tom. And our thanks again to the...
It came so close. It hit that pivot almost to the penny. Really 3 cents over. Huh. Now just really gapped up.
Likefolio team for their data. We've got the breakdown coming up. We're taking...
And look at that. So oversold. It's like crazy. And then popped. It's made a little island here. It's all buying. Yeah, it's literally just a big bullish order block highlighted in blue. See what the opening range, it's over it. First target would be here. So QQQ, opening range break.
Stay connected to the market with
What,
Schwab Network.
118?
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime.
Or
anywhere, on any device.
618.57.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn
So if
tips and
this
tricks to help
holds,
navigate Schwab.com,
so
Thinkorswim,
probably go
and
like
mobile-based
this.
platforms. Best of all, you can ask questions by chatting directly with an education coach. It's
Right.
interactive learning at its finest. Tune in
gonna
live
make
or watch on demand.
It's a
Head
hell of
over
a
to
lot of volume.
schwab.com/coaching and start learning today.
Very little wick, hell of a lot of volume. It's consolidating.
Welcome back to Fast Market here on Schwab Network. I'm Diane King
Probably
Hall.
push.
On the floor of the big board, before we get to the breakdown, let me give you a
It's
check
like $1,
of
so
where
it'll
the
probably
market
go at
stands as
least,
we get closer to the bottom of this hour.
at
You
least
still got
$1.
gains
So
on
it'll
the
break
board.
this
The S&P
high.
500 right now better by 0.8%. Dow's got a gain of more than 0.5%. Nasdaq 100 advancing about 1.25%. Brooks 2000 has a gain of nearly 1% right now.
Pushing it.
Alphabet remains at the top of the leaderboard within the Mag 7 year to date, and that is not changing today. The stock is higher at the moment. Wedbush is raising its price target on the Google parent company while maintaining an outperform rating. Among the key drivers, Wedbush expects AI monetization, continuing investment cycles, and agentic AI adoption. Bottom line, Wedbush sees Google as well positioned to continue its momentum into 2026.
Right.
Time now for the breakdown. For that, let's welcome in
So
George
it's
Silla, senior
holding.
markets correspondent, taking a look at Alphabet, Google. George, this is also the time of year where you have all analysts, a bunch of analysts, releasing their price targets and views on the sectors and looking at AI for the year. And you see Alphabet, Google on a lot of different lists, expected to continue its momentum. What's your take? What's the fundamental take on this one?
Well, I think, the fundamental take on Google is they're becoming so
That's it.
complete or more complete in the agentic AI space. And if you look at AI monetization rates, they're increasing substantially. 34% contribution rate last quarter as reported. Over $400 billion run rate per annum now. $100 billion last quarter, that was a record.
All right,
And I think,
Tesla.
this is what we
So
talked about with
Tesla, I'm
Google,
very
and I
bullish
mentioned
on just
this,
because there's
probably
been
over a year ago,
a
or close to
lot
a year ago,
of
in terms of it being the most underappreciated name in the AI
calls.
space, because everyone was really
So
focused on ChatGPT, Microsoft,
today it's selling off.
NVIDIA as the
But
architect or lead architect of the
it's
semiconductor
Tesla for
stack
you.
within that ecosystem. But Google, was looked upon as maybe antiquated. But if you think about the nature of search, which again, you could make the case that they have a de facto monopoly in search, Google and of course YouTube being the two largest global search index engine.
This is
It really comes
just
down to what AI utilizes.
consolidating,
It utilizes an indexation of search.
right?
And Google has now integrated Gemini. They released Gemini 3, the third version. It's very powerful, especially in the
So I mean, it could
programming realm,
consolidate
in the
for,
programming ecosystem, if you will.
I mean, it could
And again, they're
consolidate
essentially now vertically integrating their own search with their own program. And if you think about OpenAI
one
too, and
day.
other platforms for artificial intelligence agents, they index
It can
search, they need
consolidate for a
search, and
week.
that's going on in the
I mean, that
background.
is a
So Google
bar.
was really underappreciated. Now it's playing catch up, being one of the better performers in the Mag 7 space. Profitability also, last year 600 basis points higher than their historical average. Net income over 32%. Profits, EBITDA growth over 20%. In valuation right now, not necessarily outlandish. It is trading at around 30 times forward earnings. Typically, it's around 24 times, but the profitability is improving. Top line sales improving. I think the trends in terms of market share vertically integrated with, like I said, AI agents with their search presents them as
Yeah,
a
went to that
formidable competitor in the AI
181.
race from a software and
NVIDIA
programming
went to
standpoint compared
181.
to ChatGPT. And the reason I'm looking at
181.50 is
this
a
in this
price
context
target.
is because if you look at Oracle, and I'm using Oracle really as a proxy or a benchmark of challenges, they're very tied in with ChatGPT, OpenAI, and that's why we've seen weakness in Microsoft, Oracle, and Google is really playing market share catch up, and they've done a phenomenal job.
Okay,
So
yeah,
at
and it's I'm glad you brought
9:14,
in
I
a
said to my
quick
friend,
perspective of how Alphabet Google was
NVIDIA will
perceived
probably
earlier
try for
this year
200 by end of the
versus
year.
how it's perceived now. It was almost like
180.50,
I don't want to use the word circular because we kind of use that
and
word for
then
everything that's happening within the AI arms race
I
and who's paying
said
who, who's got what
NVIDIA
contract.
support
So, you
resistance
know,
is support
the
now.
expectation that it
It's
seems to
holding
be
that
is that
whatever level
we'll see
179,
Alphabet Google, when I look
178.
through various analyst takes, that it will continue to be at the top of the ladder into 2026. Are you seeing
And then I said it would
similar
go
things, or is there
to
something that's across your radar that we might be missing?
I mean, if you look at just the technology
I
integration,
guess
if you
20
look at
minutes
the
ago,
core revenue base for Google, which is
181.19.
supportive, it's substantive
Now it's
to
at
essentially, propagate, if
181.07.
you will, their agentic AI technologies.
So
Looking at it relatively speaking, I mean, OpenAI, because it's private, we really don't know what the revenue is. And I'm using Microsoft as a proxy for what's going on with OpenAI because they own a portion of
yeah,
that
it'll
company.
probably
Looking at
test
relative
that at
performance of these
least.
names. And so, again, I think Google has done an exceptional job. And I think this is why the
It's a
market's
lot of
rewarding it,
volume. Wow.
integrating its agentic AI technologies within the context of search. And it has such a large revenue base to support its ongoing capital investments. And that's why I think, there's a possibility it just continues to lead from here.
All right, thank you, George. That is George Sillis, Senior Markets Correspondent. Have a great weekend, George. Let's
So
get
I
Tom
don't
back in
like
here for
that.
example trade purposes. So, Tom, you got the example trade in Alphabet
It's
Google.
made a
You
higher
probably read through
high.
some of the views on Alphabet Google as we head into 2026. You know the performance already. What's the approach you're taking?
And
Yeah, I think if you take a look at it,
this
you know,
is
the
making a
results
lower
basically
low.
from earnings have been supportive, you know, as far as growth goes. They
So
continue
technically that
you
is
know, just
bearish.
hammer everybody as far as search. They own 90% share in there. They're not losing any of it
Right
from
now,
any of
it's
these
bearish.
AI models, and ChatGPT being one of them. Gemini 3 rolls out, and it just blows everybody away as far
Yeah, I
as
would
the
probably
reviews
go
goes.
short.
And they just released their new Gemini 3 model, Gemini
This
3
is
Flash,
a
yesterday to add to that family in the Gemini 3 class. So outperformance at
this
this
is a
point,
paper
and the
account. This is
integration
not
that
real
they're
money. I'm
doing
done
with
trading
their
today.
AI into their already established search business has been one of those reasons that you're seeing all these analysts raise their price targets, saying this is going to be their top pick over the next couple of years, as they're figuring out and monetizing AI a lot quicker than others within this space. They do have that CapEx spend that's been in the thorn of the side of a lot of these AI players, but if they keep
that's
on
on a 4
generating
hour,
the
that's why.
returns on their investments the way that they have, that's why I think the optimism's back in the
Lots
stock.
of
But like I mentioned,
volume.
stock's up 61% this year, just off of those all-time highs that we hit just a few weeks ago, down about 7% from those levels. So I looked at a strategy in here that's a little bit more passive, not as
So
aggressive as some of
basically, I
the other
just
trades
look
we
at this
talked about
delta. It's
today. And
positive.
this is still a bullish trade as an example, but it's more passive, a little bit higher probability of success, but
When
with
it's
that comes
this pink
a little bit more risk.
fuchsia,
So going
it's
out to
very
the January
bearish, but
16th
I usually like it at
monthly
the bottom,
options, so
not at the
28
top
days
here.
to expiration.
When
They don't
these
have
are at
earnings until
the
early
top,
February, so
it
this will
could be
avoid earnings.
shorts covering,
And if
so
you
they
think that
bought,
it's
so there's
going
a
to
lot
at
of
least
buying
consolidate,
there.
maybe go higher,
But
or you could be wrong and the
this
stock
little
goes lower, you
golden
still have
yellow
a chance to
here
be potentially
is
profitable on this
basically
one.
acting
January
as the
16th,
point
sell
of
that out of the
control,
money,
which means there's a
295
lot of
strike put,
buys and
about
sells
$10
right in
out of
this
the money to the
area here.
downside. And then
And
against
there's
it
a
to
lot
make
of
it risk
buying
defined,
here,
this is a high price
so
stock
if
by the
shorts are
285
covering, it's
strike
just
put.
going to
So a
push
short
this
$10
up.
wide neutral to bullish put vertical, collecting roughly about a 210 credit. The
I kind of
credit
want
you
this to
collect
go
is what you can
higher.
profit on this this
And
trade,
then I'd enter
$210
shorts
with
like
$790 in risk, but that's all the way
5 at a
below
time,
the 285 level. If
like
you collect
that.
that 210 credit, Diane, takes the break even all the way down to 290, 290 to the downside, and you've got a probability that that short strike at January expiration will be out of the money of about 67%. So high
I think it
probability
goes higher, but
of success on this
NVIDIA now is
passive
going
neutral
lower.
to bullish example.
All right,
So
good stuff.
I
That is
should
going to
exit
do it
this
for us
channel.
today
It's
on
really kind of
Fast Market. I'm
annoying.
Diane King Hall, along alongside Tom
Right,
White.
exit
Our thanks
this.
again to Kevin Green for joining us today. Download the Schwab Network app. It's in the App Store and tune in
Exit
24/7
group.
on SchwabNetwork.com. Stick around. You've got Next
Exit
in
group.
Investing
There we go.
coming up.
All right, that's better. So let's see here.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With
Video's
Investor
coming back
Checking,
up,
you get
though.
the award-winning features of our checking account, plus cash management
It's
solutions,
almost
all
1, usually
designed for
between
investors like you. With
1
unlimited ATM
and
fee
2.
rebates for
There
cash
can be
withdrawals
manipulation in the
worldwide,
market.
no overdraft fees, and enhanced security features to keep
Usually
your
between
money
1 and
safe.
2.
Also,
People are
because
coming
your
back from
investor
lunch
checking
and they're like,
account is
shit,
linked
I
to your
missed this
Schwab One
move.
brokerage account, you
So
can
they
manage
will
your
want to
checking
get
and
into
investing
it.
in one
They might
convenient
sell
location.
a bunch
Moving funds
to
between
get
your
at a better
accounts is easy.
price,
Cash
and
move to your
then
brokerage account is available
go
in
buy it.
seconds. That means you can
Um,
stop waiting and start investing in stocks,
So yeah, now
bonds,
this is
money
going
market
up.
funds, and more. Get more
So
with
now
Schwab
10,
Bank Investor Checking, the checking account built for investors.
and then looks
Welcome
like it's
to
gonna
Schwab
hit
Network,
my
where real-time market coverage meets
level.
expert strategy.
From the opening bell to the closing bell, we've got you covered.
So I'll sell more there.
Get inside the minds of pro traders.
My point is that they're getting a higher
Nothing
rate of change
crazy,
in
and
sales
this
based on their
candle is
guidance,
gonna
but
be
not
the
the same rate of change on
close.
EPS.
Follow the
So
biggest
in
headlines,
3
live
minutes,
analysis, breaking news, and sharp
less than
trade
3 minutes,
ideas
2.5
minute
minutes.
by minute.
With shows built for action, we break it all down in real time with
Oh,
speed, accuracy, and precision.
I think
buy
one of
that
the most
tick.
important things is you're making a play in a risk-defined way here going into earnings.
Now if
So
we look
that
at
would be a
Nvidia,
further
like,
downside area to watch.
Smart
eh,
insights, actionable
I think it's
data,
going
veteran traders, and trusted financial journalists streaming live and on
right.
demand.
Schwab Network, streaming 24/7, any screen, anywhere.
High
free.
volume, so it tried and then it
SchwabNetwork.com.
ended up lower. So people are trying to push it up, and they're
And
really getting
last year,
rejected
my
at this
dad had
level
a
here.
stroke. Big shock to see this person that I've always seen as a force in our family
So
being vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free
So yeah, that
24/7
would be
at schwabnetwork.com.
kind of where you wanted to go. I don't have us take profit. Guess it's not gonna go there. It's close though. Did it hit at? Oh wow, 1 tick. It's literally 1 tick off. Wow, so people are front running it. They're like selling ahead of it. Okay.
Welcome to Next Gen Investing. I'm Jenny Horn, and let's check it on markets here at the noon hour Central Time, of course, in Chicagoland, as we are seeing a pretty nice session to close out this week. Now actually sending shares of the S&P and NASDAQ higher on a week-to-date basis.
Lower.
Well, we do still see some overall week-to-date performance sluggishness from the Dow as well as the Russell, although modestly, that actually now only down about 0.8% in the Russell, while say the Nasdaq's out in front on a week-to-date basis, now up about 0.5% this week. So a lot of enthusiasm that has been tied really to the back half of this trading week.
Just
as of course we
because
close
the
out
EMA
the
is
final
right there.
full week of trading for the year. But joining me now to discuss some of the top movers,
If it hits
definitely
it,
influencing
it'll hit it.
hopefully some price performance
gonna
to the
bounce right
upside in
off
this
it.
market. Sam Vadas, of course, host for the Schwab Network. And so, Sam, just wanted to get your
Yeah, I
broad
still
thoughts
think
here
it's
on this
gonna hit
market, as I
it.
will say the tone definitely feels a lot different to close out than it did to start.
Yeah, absolutely. I mean, we are seeing an extension of these gains we'd seen yesterday off the back of cooler inflation, and of course also what we got from Micron, which sort of gave us the green light as far as the resumption of this tech rally. And so a lot of follow through we're seeing today, leadership back in focus, really taking this market higher, as you can see, propelling the NASDAQ to really the outperformer. We've got technology
Just a
up
little
over
bit
1%.
lower.
You know, you have the usual suspects back in the
So
limelight
it
here.
hit.
You've got Nvidia up almost 4%. You've got Broadcom up 2.5%.
Hit.
You've got Oracle, of course, up over 7% on the back of that TikTok news as
That hit.
well. Chips are having a very good day. Look at AMD. You're up 6% there. You know, I'm looking across some of the Bitcoin related stocks as well. You've got some really nice gains there. I mean, you know, particularly those in the business of the Bitcoin mining too. So across the board, we're seeing sort of more risk on when it comes to technology and sort of the more riskier assets as well. So as I said, a little bit more sort of follow through. Obviously, it's been a big story as far as some of the earnings reactions. I know we're going to dig into some of the individual names, but it's also been a day of higher yields as well. Obviously, we got the BOJ, which is the Bank of Japan, which did hike rates overnight. And while the yen actually has weakened, which is a bit of an interesting move, not very typical, but that's got to do with the guidance coming from the governor of the central bank. We do actually have those sort of higher yields globally, keeping things in check here. So we are looking at the 10-year higher and sort of elevated as well. But that doesn't seem to be impacting stocks too much, as we do have, of course, as you mentioned, a really nice sort of rally here to cap off the week. Some Friday cheer in what is
It's a 50% of this.
week of 2025.
Usually with these order blocks, it'll retrace
and lots of news to get through, but
50% of it, which it did here,
I know we're very much at
and
the
it's
tail
making
end
a
of this
higher
earnings season,
low
but
now.
start off with, unfortunately, what is a drag
This isn't
today,
very
Nike,
bearish.
which is
This
down
is
over
more
10%.
bullish.
I will say margin outlook does at least show some quarterly improvement, Sam, but that is really as optimistic as it gets, because I know that the fears have been surrounding all things China, as well as still some North America weakness.
Yeah,
Alright,
it's
so
been
now
an
it
interesting
tested
report
that
out from
EMA on
Nike.
the
Obviously,
1
this has been
minute.
an underperformer. Everybody is wanting to see more updates on this turnaround strategy. You know, this is a big ship to turn around, and that was really what we heard from some of the commentary. But look at the price action today. As you say, one of the underperformers on the session, broadly speaking. So we're down 10% right now on Nike shares. It is off the lows, suffice to say. That's the good news. It wasn't all bad. Let me just run you through the quarter. Earnings per share, 53 cents versus about 38 cents, which was expected on revenues of $12.43 billion. $12.22 billion was the street's estimate here. So as far as the quarter, it was actually a beat, but really it is the concerns around China that seems to be what is behind the price action we're seeing today. The investor worries, which is leading to you know, how people are feeling about this company moving forward with respect to obviously that market coming off. That has really been a bright spot. Yes, okay, we did see some more strength in the North America market, which did help offset some of that weakness. That was up actually 9%, while Greater China was down 17%. But this is still a bit of a concern here for this company, given that this has been a very strong market. This has been a market where they have very much seen sales that have managed to offset some of the weakness in other parts. But it's the margin pressure very much that seems to be the big story for this company, and what investors are focusing on right now, because they are absorbing tariffs and they're also clearing a lot of that inventory as well. So while you might see a bright spot in the North American market managing to offset the Chinese market, you're still getting those products which are coming in with having to pay the higher tariff cost on. So you need to keep that in mind as well. Also guided to the fact that margins may continue to get hit. So, you know, this is really how they see things in the future as well. So it's the margin compression story that seems to be what is moving the stock to the downside today. Interesting though, Jenny, if you take a look at what the analysts are saying, I mean, there still seems to be some optimism here. I mean, Bernstein has reduced the price target to 85 from 90, keeping an outperform rating, however, on the shares. They've acknowledged the beat, but still saying that the company has a long way to go as far as the turnaround. And BFA also bringing the price target down to 73 from 84, but they've still kept a buy rating here. They are talking about the margin compression too. So it's not all that bad, but it is hurting other athleisure names. Very interesting if you take a look at the European session, which obviously was the first to react to this. Yesterday you saw Puma and Adidas down, and also you're seeing today Lululemon and On Holding getting dragged down lower, sort of in sympathy. But obviously this is a turnaround story happening over at Nike, where they have focus.
then
This
it
is
tried
a point that
pushing
one
it
of the
and
analysts made earlier today that I
So
heard,
now
where they
it's
have put their focus, they
testing.
are seeing some success. So I thought that was really interesting, particularly around wholesale. This is a
And
business that they
on the
actually
1
pulled
minute,
back from,
it
they shifted away
is
from, but have got back
gonna turn
into.
up.
So they
So
have seen a little bit of an improvement there, but
I
it's just not enough,
probably go
Jenny, to
long.
offset some of the China
Yeah.
weakness and concerns around that, and
So
also, of
now
course, this
it's
margin
good to go
compression.
long.
I know. I thought the direct-to-consumer business contracting was interesting. Is that such a shift
51.
from the business model we knew just years ago?
We're
They
at
were our
81.
DTC king,
So right
and they've
there.
since strayed away a bit from that
So I
strategy, which actually was,
exited.
I agree, a bright spot of that earnings report. But another name seeing some weakness on the heels of its earnings was Conagra
Probably
Brands,
gonna
which,
go
just to break down some of their segment performance, which I thought was so interesting, grocery and
here.
snacks, those sales decreased 8.5%. We did
Just
see
wait.
refrigeration and frozen that also declined 6.5%. International also slumped roughly 5.5%,
The
and
reason
their food
why
service
this candle
segment
has
another
no wick,
1.3%
so
contraction year over
it
year.
will
So
probably make
that
a
does not
wick.
paint a super positive picture, but I will say that
Bounce
we're
off
down
the
about 2.2%
CMA.
today. It's actually not a bloodbath by any
And then
means,
go
given the
back
fact
up.
that there was not a
Maybe
lot to
test
be
this one.
enthusiastic about regarding their outlook either.
This one.
No, as you say, I mean, you pointed out some really good metrics there as far as, you know, what seems to
We'll
be the
see.
worry here. I mean, you know, you're seeing the stock down as really a reflection of some of the concerns that you just highlighted with those numbers. I mean, just generally around sales and the macro environment, the
Oh, got
challenge
me.
here, the market pressures that they are facing as well. I did also see
Did
they
that not get the
reported a
other
net
one?
loss of $663.6 million in that fiscal second quarter due to some non-cash impairment charges as well. So, you know, it was a bit of a mixed quarter here, but they are facing some challenges here. We
Still should
know
hit it.
that, of course, the consumer is value hungry right now. I mean, they are tightening their belts. The CEO even
What's it
acknowledged
at?
budgets are constrained right now, coming from
Nvidia.
households, particularly, you know,
Nvidia
the
is still
lower end,
positive on the
low-income
day.
consumers as well. Retailers have also been pulling back on their orders, and they have also cited the government shutdown as,
I'm
you
happy
know,
with
part
that.
of the reason behind
Add.
that too. You know, that perhaps reflects some of the lack of visibility we had around that period of time, which of course this quarter is capturing too. They talked about how things were actually
It's far
impacted
away.
too because of the SNAP payments which were stopped. So, you know, obviously we're seeing some sort of material impact here in these earnings, or at least the commentary with respect to what happened there with that government shutdown. But they do, interestingly, sort of maintain market share in some of those single-serve meals as well. Now, just as a bit of a bright spot, you could say, they do expect things to get better in the second half of the fiscal year, and that is thanks to some of the new products that they are launching and more merchandising as well. But once again, it's another case of where, you know, some of the things that they are saying that might be, you know, a bit more optimistic is not enough to offset some of the challenges that they've been facing and what they highlighted this quarter, particularly around the consumer, which we know has been impacting other brands as well, Jenny.
Yeah, and we know for a lot of these staples, I mean, yes, it has not been a Conagra-specific story. The
Probably
pricing environment
here.
does still remain fairly difficult to navigate, and they do. I liked that they gave the encouraging guide for the second half of their fiscal year, but I think that we need to see it evidenced as consumers at these grocery stores, which it is still very expensive, and I'm not sure that will change anytime soon. But our next name today is FedEx, and FedEx was a very different story, frankly, when I covered it pre-market, because now we're actually higher. So I mean, modestly, and I say this cautionally because we're basically unchanged, but hey, shrugging off earlier losses on raising now their fiscal 2026 outlook. Very mixed
That's
bag
a
from
very
FedEx
strong
quarter.
reaction.
Definitely, I think, encouraging the way we've seen dip buying, obviously, of interest today, and a lot of the enthusiasm has really revamped as we were set to. I mean, we opened lower, now we're at least slightly higher.
Yeah, and you wonder if some of the reflection coming through from the stock as far as, you know, coming off the lows, as you mentioned, is to do with what we're hearing from the sell-side community as well. I mean, you know, while there is some caution, as you say, a bit of a mixed quarter here, a mixed bag as far as the earnings were concerned. I mean, analysts don't mind the quarter. I mean, I was looking across some of the notes today. I mean, JP Morgan looking at 294 now from 285. We're currently trading at 286 and change right now. Citi is now looking at $327 from 310. You've got
Don't
Evercore
like how
ISI
that
at 288
is
from 275,
negative, but
and then TD Cowen 313 from 271. So some of
It's
the
a
reasons
nice
behind some of the
level
price target
here.
boosts have actually been around analysts seeing pricing power moving forward and also improving operations in Europe, which has typically been a bit of a weaker spot. So I thought that was a really interesting takeaway. And, as you say, off the session's lows now, but teetering around the line at the moment. But I think that's just a reflective, as I say, of the mixed quarter that we saw. Some of what had been weighing on the stock earlier, or at least, perhaps continues to do so, right, sort of capping some upside here. I heard that some of the pressure might be coming from the
I'm gonna take
guidance,
this
particularly around
out.
the freight division specifically,
Take
and
this
maybe the
out.
negative impact from grounding a specific fleet of planes there. But yes, I think, as another analyst actually pointed out, which I saw too, was that the problem with the strong quarter was that the updated guidance here actually implies now second half operating profit will be about 5% lower than the roughly
it's all
$3.2 billion
neutral, but
that Wall Street
positive.
was projecting. So
yeah.
I think there's a few sort of mixed reads within this. Obviously, we know that this
Still
is a company
holding
that
this.
has dealt with a lot of the tariff impact. I mean, as far as not having any visibility sort of in the middle of the year and then reinstating that guidance. I mean, this really is a bellwether stock, Jenny. I mean, it is a barometer of the global economy. I mean, you're talking supply chains, you're talking about small business, medium-sized businesses. I mean, just how consumers are feeling, the geopolitics and the tariffs as well. So, yeah, I think, obviously there seems to be some to like in this, maybe some not to like, but it looks like at least things seem to be improving, and they very much put down the performance that they saw to the cost reductions, which has been a big focus of the street,
Yeah, like
and then also the increased shipping volumes, which is something actually
but
we've heard
Nvidia
across
is
the board. It looks
holding.
like there's some resilience in the face of the tariffs and the pessimism that we were talking about earlier this year.
I mean, absolutely. If there's any barometer of shipping health, it is my apartment building, which the lobby is overflowing with packages right now, although mostly Amazon, I will say, which perhaps is what is also driving some of the sluggishness with FedEx. But encouraging to definitely see that we've turned around pretty substantially just in today's session alone. Unfortunately, what has not been a turnaround story has been KVH, as they also saw some earnings disappointment. I mean, I saw margin pressure highlighted, as well as build to order was highly in focus amid these slower home sales. And so the tone isn't a new one. Frankly, we've talked about it a lot with the other home builders, Toll Brothers recently. But
It's
KB
still
Home, the
going
one
up.
thing I think is important to note is the home builders are not all created equal. KVH is one of the smallest by market cap. So it's not to say that, the 8.7% move to the downside is something to write off, but this is a significantly
the
smaller
4
home
hour.
builder than, say, the behemoth that is DR Horton.
I got 1,
Yeah, you
2,
raise a very good
3.
point. It also has exposure, of course, to the
Negative
first home
positive.
buyers
Take
market
that out.
too.
Let's
So I think
see.
that's important to keep in mind as a sort of
So now it's
differentiator here. But
positive.
it's been a really, really tough old year for a lot of
There.
these companies
So
in
we're
this
up
business.
here.
I mean, just because, of course, the
We're up
general
here.
trend has been
It's
one
pretty
that the housing market
bullish,
hasn't turned
right?
around as much as
Nvidia's
maybe some
bearish
had
though
hoped,
right now.
particularly when you've got 3 interest rate cuts in the system, which many had expected would help people come off the sidelines, but it just
Right
hasn't been
there
the
at
case
that.
here. Interesting, though, with this report, though, Jenny, I would say it wasn't earnings beat and a revenue beat, but the market reaction
5.
has been somewhat very pessimistic, and that
Yeah,
comes as,
that was literally
obviously,
the
to your
top
point,
that I
a bit of a
picked.
cautious outlook and, ongoing concerns around just sort of general market conditions
It'll
at the moment,
probably go
about
down.
affordability. There's that word that keeps
I
popping
have
up
on my
over and
desk
over again.
manipulation
It's interesting, I was actually
1 to
talking to a guest
2.
on Market on Close a
So
couple of
it'll
days ago. I think it was from
probably
the conference
sell
call. It
off
was an economist who was talking about
now, even though
the age of the
this is
first home
all
buyer has gone
bullish
from the sort of
delta.
mid-30s now to 40
So
or
like,
something since pre-COVID days. So I thought that was super interesting as well. But yeah, the CEO still sees things as challenging.
that'd be more
Elevated
to
mortgage rates,
buy.
affordability challenges, the
This
housing
would be
conditions
good
remain
here.
challenging due to low consumer confidence.
Right.
So I think, all in all, this is a situation and a challenge and a headwind that all these home builders are facing. I mean, we've heard it from Lennar and, Toll Brothers, the others in this business too. So you're feeling it across the board.
Remember to always
It's the
change this.
incentives
I always
that now
forget and then
obviously
buy
a
too
story of
much.
margin pressure as well.
Luckily, this is
That's something that the
paper.
street has been very focused on. The price drops that they have used to try to incentivize those home buyers to step into the market, that is going to become an issue for profit in some of those margins. And then another story that I think is really interesting to watch with some of these home builders as well, Jenny, is just commodities prices. You know, everyone's talking about this commodities bull market going into 2026. I mean, we've already seen these skyrocketing prices for things like copper, aluminum, silver, etc. this year. Something that a lot of economists have been pointing out.
All right, so this will probably rally into the end of the day.
This could become a margin problem as well. So it could be a bit of a double whammy for some of these home builders if those higher input prices start to translate into how much it costs to build a home
Yeah,
and then how much it
definitely
costs to buy a home. So that's just something to think about and a bit of food for thought about some of these names.
A really good point as well, and frankly it's been widespread. It hasn't been necessarily specific to like the first-time home builders,
So
the
all
more
of this-
affordable home builders, or even the high end, where we talk a lot about the K-shaped economy, but frankly as far as just broader
All
home
delta
builders, it's still
positive
all of the
on
pricing pressures, the affordability concerns, and the lack of
lowers.
buying right now is that deferral mindset seems to still weigh on sentiment. So really great insight into all
really
of these
just a
earnings movers that
bull
we had to parse
flag.
through today. Sam Vadas, of course, host for the Schwab Network. Now, coming up next, it's time to dive into some charts and example trades. We'll be joined by our chart master to break down the nice, actually, upside swings we are seeing in NVIDIA and Oracle to close the week on a brighter spot.
I don't like this bearish divergence on NVIDIA, but top. I think it's good to go long here. This would be a good place to go long again.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever
As long
you
as
are.
NVIDIA holds this 180,
What's up, Carl Nation? It's your
which
number
it's
one
like
broker with the best
teetering.
full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
I mean, this kinda is making a
Carl.
this is kind of a bear flag.
Whether you're a bull or a bear, you'll want to catch the latest
High,
market
a
action
low,
on
a
Morning
lower
Closers
high,
with me,
a
Diane
higher
King-Hall,
low.
live from the floor of the New York Stock
To
Exchange,
break above
only on
this.
Schwab Network.
Right.
Welcome back to Next Gen Investing. It's now time for the Chart Master, and today we are
Yeah, I
talking
still
about
like
two of
it.
our behemoths in the broader world of AI
15
and tech.
second.
Now, Oracle with the big pop today to close out the
Just
week
going
actually on a
through
pretty bright
it.
spot, as well as NVIDIA we'll be diving into. But Rick Ducat, our Chart Master, is here for the technical and trade setup help. And so Oracle, of course,
Probably
part of this
add.
TikTok deal. I think that the bigger story with Oracle has been a lot of its spending
Perfect.
concerns and its ability to monetize AI, but shrugging off at least some of those fears today with an 8.2% move to the upside.
Yes, there's still quite a bit of work to do to recapture those old highs that we saw shortly after our previous earnings event in September, hitting those highs 345.72. But typically I look at 1-year charts in this segment here. In this case, I put it back to 2 years here because there's some important
Let's
old
just
highs that I
let
wanted to
it
focus on
rock.
here. First, there's our darker green line here. That was the low point before a gap down, a subsequent high point, and then a breakout point. If you were to go even
All right,
further back
wonderful.
It was where we found support as well. Now we've fluctuated around that area, but look as well, 179, our lighter green line back here, notable old high, low point after a gap up, high point after a gap down, resistance, etc. So that's where we bottomed out here. So we had a 10-point range, about 179 to 189. That seems to have been a long-term supportive area that has thus far held on. We have not yet taken out our old recent relative highs here near 202 from just like about a week or two ago. But we have not filled the gap either yet. 217, old highs, subsequent lows, and then gap level right here at our pink line there. That's another notable upside area to keep an eye on here. But our narrow, tight, downward sloping channel in blue has been broken at this point pretty convincingly here now, so that may not be really too relevant to watch going forward. The shorter term price pattern, though, is a falling wedge type shape here that we have broken out through to the upside from. So now these horizontal levels may be a bit more important to consider. We can see that our RSI study, we are out of the oversold area, that threshold below 30. So that would be more of a bullish signal here, the crossover from that extreme low momentum area here now. But we still would want to see a crossover above the 50 midline if you did have a more bullish outlook in that this particular stock here. Finally, when we look at our volume profile study, you can see there's some pretty distinct nodes here, some spikes in this blue histogram on the right side of the screen. That's our volume profile study. So the areas that stand out for volume activity, 189 right here, around 202, and around 217. So lining up very closely with our horizontal areas that we mentioned before in this segment here. So those really stand out not only from a price perspective, but also from the trading activity that we found at these areas.
Okay, yeah, and Oracle, of course, I mean, an 8% move is a pretty substantial repricing to the upside, so that's encouraging, but doesn't do a whole lot to revise the over 40% pullback we have seen since it's, I mean, one of its best days. I believe it was its best day on record, surging 36% after it's now 2 earnings reports ago. So it's been a bit of a different story for Oracle in the latter part of this year, but as you think through now trading Oracle for example purposes, given all of the information we have, walk us through your thinking.
Okay, so the thinking behind our 2 trades today in these 2 tech companies, we're going to go for bullish example trades, and both this one would be the one that's a little bit more conservative and more high probability with less potential rewards. So the trading question, +1 February 20th, 200, 220, 230 strike, call butterfly at a 425 debit here. So this would be a bullish trade, obviously, 63 days out till expiration here. Max loss would be that debit paid 425. Max profit 1,575. So a bit worse than the 1 to 3 risk reward ratio that we commonly look for here. But really, though, that's kind of a bit misleading because we have this long flat area. If we get above 230, we maintain profitability here. Our sweet spot is near 220. That's our short strikes that we're selling. 2 of those 220 calls that would be make it a butterfly here. So we can also see that if we did look at why we chose those strikes, that 200 level to the upside, that's where the significant volume node came in. It was near those recent highs, so we'd be looking for a breakout above that point. Then 220 to 230 is where the volume drops off, and it's also where we find the edge of that expected move range for that option expiration month. So if you're going to pick a point for price activity to stop, you can think about that as a way to get started here.
Okay, now to shift gears into another name in the broader AI world, a bit bigger of a company, that is NVIDIA, which is up about 3.3% today. And also sentiment for this name has hugely improved even just this week, as Micron earnings was a pretty nice catalyst for NVIDIA here. So a lot of pessimism about some of the pullback in shares. I know we're off of highs, but at least ending this week on a bright spot.
Yes, Micron said demand far exceeding its ability to supply the chips and memory storage here. So it seems pretty interesting for NVIDIA as well. When we look at our price activity here, downward sloping trend line in this case is looking like we are breaking out to the upside from that area here. You can see connecting our highs from those all-time highs
this
near
is probably gonna touch
212.19.
lower.
Notice
Oh, well.
as well to the downside near
All right, that was a
171 or so.
practice
We held
trade.
on
That
to
was
this
not
area,
real.
a darker
I would
green
not
line
do
here
that
that we
much
saw
size
recent
on a real
lows
trade.
at.
If
We
I
held
do,
on once again. If we were to even move below that
please
point,
don't.
though, 165 also stands out as potentially supportive based on another pre-gap high point.